All right. Okay, so we're recording. Welcome, everyone. This is Sunny Ray on the StudyRay.com show. Today, I've got a incredibly exciting guest, someone that I've known for maybe the better part of about a year now. And he is the founder of a company called Knox. His name is Tibbs, and I'd maybe turn it over to you and do a quick introduction.
Yeah, absolutely. Thank you, Sunny, for having me. It's awesome to be here. I'm sure we have a lot to cover. I hope we're going to make it in the hour. Um, Actually, the funny side of the story is that I'm a early employee at Knox. Officially, Alex Daskalov is the founder. That's the little side story. And yeah, I got started in Bitcoin, back in 2016, late 2016, 2017, and made the jump full time in the industry in 2018. Though at the time it was a crypto industry, and I'm pretty sure we can cover that. So at the beginning, I was working at a venture firm called Real Ventures. Real Ventures had done a few investments in the space back in 2015 and 14, notably Blockstream. They led the seed round of this company, which is one of the most interesting contributor to Bitcoin Core today. And at the time, I really didn't understand anything about Blockstream. By the way, it was just a very convoluted bunch of sidechain technology and satellite for a financial services world. It just didn't make sense to me. Um, and yeah, and so back in 2017, we started building a crypto thesis internally. So the goal was, as a VC, to think about the space of cryptocurrencies and understand what it meant for us as an investment manager. And we started building that thesis internally and essentially got stuck in the operationalization of that investment strategy. And the biggest hurdle for us was custody. Custody was a really hard thing to figure out because usually when you're in venture capital, you don't hold instruments of your companies, right? You have ownership on different cap tables, and you sort of coordinate with lawyers and different software to do it, but that's pretty much the extent of it. It's a bunch of legalities. Whereas with cryptocurrencies, it was a lot of, of course, the private keys and the fact that they act as bearer instruments. And so it made it pretty scary for our CFO essentially to be like, look, I'm going to hold two, three, $5 million worth of crypto in a little device that I'm going to have at my place or whatnot. So essentially it didn't pan out. And we started looking at other more institutionally focused custody solutions. And that's how we stumbled upon Knox. And so I found the team. I was back in late 2017, and they were working on the very early version of the product. And it seemed at the time really interesting what they were doing. To be frank, I didn't understand too many things about the sort of public key cryptography work they were doing and the overall security model they had and all this, but it seemed like a bunch of really smart dudes, and started speaking with them. And yeah, the rest is history. I joined the team in summer of 2018, right at the time when they raised their seed round with Fidelity and Initialized Capital and other Canadian venture firms, and started building this custody product and selling it to investment funds.
Very interesting. I was not even aware of that you were with Real Ventures. I know about those guys
Yeah.
being in here in Toronto. Interesting. So that's how you got to start thinking about it. And what about? Just curious. Prior to that, were you from Canada originally? Are you from elsewhere? Are
Yeah,
you coming more from like a technical background or a business guy? Or what's your kind of yeah?
yeah, I'm a proud French from France, and
Hmm.
I immigrated to Canada when I was 18 after graduating from high school, and yeah, I wanted to leave France, which was a very traditional country, and at the time for me, it was sort of against what I wanted to do, which was party at a American high school or American college, right? And so because I didn't have the money to go to the US, Canada was a great option. It was in the middle, right? It was the affordable education from France. Well, France is mostly free, but uh, and the sort of very open, and free lifestyle of American campuses. So I moved to Canada I was in 2011, and I've stayed there for 9 years. I had a bunch of different trips and residencies in other countries, like in the U.S. and in Argentina, notably, where I actually got a few encounters with Bitcoin over there. Yeah, I'm French, mostly grown in France, and who discovered the Canadian subculture and cold weather.
Interesting. And I was also curious, and we're going to get to some of the other things like your recent article and all that. But while we're on the topic of like your story and kind of your background, I mean, I'm curious to know, like, it strikes me like you have a bit of maybe like a philosophical kind of background where you maybe studied some of that or maybe thought about it deeply. But where did that come into the picture, or is that something more recent? Or
Yeah, I mean, yeah, it's interesting you mentioning this. In high school, so we had 1 year of philosophy, and people used to call me Jean Paul in in the class as a reference to Jean Paul Sartre, and it feels like a bit cocky to say this, but yeah, I basically like I love sort of writing dissertations and think about like metaphysical problems, and I think the Bitcoin space is a real fertile ground for these types of mindsets and reasoning. And yeah, it really sort of brought this interest back in my life back, I would say, 3 years ago. There's a lot to philosophize about when one tries to reason about Bitcoin. Um, it's the low time preference, I guess. It sort of shapes the mind to think deeper about things.
absolutely, absolutely. I couldn't agree more. Yeah, well, I mean, you've kind of touched on something, but I'm really curious about also your, like you mentioned a little bit about Bitcoin. So before even the custody battles, I was just curious, Bitcoin itself, right? Like, what was like the moment that you discovered it, and what was that like? Like, did it take you a couple times before you were like, and there's something here, or was it like an aha moment right off the bat? I'm curious to know about your Bitcoin story, you know?
Yeah, man, it took me a while. First time I heard about Bitcoin that actually used it was in 2012 on the Silk Road. It was in an economics class, and I was browsing the Silk Road with a friend who was buying Adderall at the time. And he showed me this website, and he basically, showed me all the postings, and everything was priced in BTC, right? And so to me, I completely sort of labeled it as a currency for the dark web, which was, illegal and sort of completely for drug users and criminals, and that was pretty much it, right? So that was in 2012. Ignored it completely. It didn't resonate at all with any of my values or interests at the time. And then I stumbled upon Bitcoin again in 2014 when I was in Argentina on exchange. And in Argentina at the time, like the economic situation was it's pretty unstable, like a lot of demonstrations, rising inflation, not as bad as it is today. Um, and at my university, a bunch of students were part of a trading desk, and they were basically trading commodities, currencies, and Bitcoin. I was in the sort of finance department over there, and yeah, so heard about Bitcoin and didn't make much of it. Didn't really dig into it at all. But I actually wrote a paper at this time on the sort of history, the economic history of Argentina, and of course the different episodes of inflation that they had back in the days, right, in the 80s and even 70s. They actually had three major currency devaluations prior to the episode at the moment that they're undergoing. And so yeah, it didn't click, right, because Bitcoin definitely fixes this, but at the time it really didn't click. I was just I was into economics. I understood that sort of currency inflations were obviously bad for citizens, like the sort of hyperinflationary movements. But to me, I guess I still had a normie mind when it came to understanding that any amount of inflation essentially is bad for the economy and for human beings holding it and using it. And then basically I stumbled upon Bitcoin again in late 2016, early 2017, when we started building that crypto thesis internally. And funny enough, at the time I thought that Bitcoin was a old school technology, right? I thought it was done. I thought it was the MySpace of cryptocurrencies, but that they were up and rising networks and protocols that would essentially make Bitcoin obsolete. And one of them, of course, was Ethereum at the time, labeled as the unstoppable global computer. It was a really compelling narrative for people like myself and other investors and other technology folks who were basically into new technology trends. And it felt pretty compelling because, there's been a lot of centralization on the web. And so when you hear, about a computer network that is completely uncensorable, that is completely, unstoppable, and that allows information to freely flow, it is a compelling narrative. I'll give you that, right? But if you really dig into it and you do due diligence, and we're going to cover that, I'm pretty sure, in a moment, you realize that a lot of these narratives are completely shallow. There's absolutely nothing behind those projects, and it's mostly, a delusion that is sold by promoters in, looking for a profit.
Oh, I think we just kind of jump into the deep end right off the bat. What do you say? Because so you wrote this article, right? It's called what? The Plague of Shitcoinery?
The
Is it the Great Plague
of Shitcoinery?
Okay, look, yeah, I'll just say less here. I'd like to hear your perspective. So, I think the most recent thing I tweeted was just the fact that Samson Mao had recently debated Vitalik, and and I've been close to the project, you could say, since the early days. I was literally renting space at Decentral while it was being made. I was working for a company called Buttercoin, and so I feel like I have a bit of an insider view, but I'm torn. I mean, in the sense that, so I'm very curious to know what is your take, and would you consider yourself, okay, so I'm trying to process so much here. So first of all, you did say that it was Ethereum's kind of claim of the global computer and the project itself that initially attracted you, right? Did I catch that wrong, into this space?
Yeah.
So I mean, there's something positive, right? I'm just saying, like that. There's something. It caught your imagination. But yeah, maybe let's talk about that first. I know that's going to be a bit harder to talk about, right? Maybe for yourself with the article that I just read. But what might be, other than that? What might be some of the positives that Ethereum's brought, to the ecosystem?
Look, man, I think it's actually great because it's personally, it was kind of cathartic as well to write this article on the Great Plague of Shitcoinery, because sure, it brought me to the space, quote unquote, but at the same time, I wasted a bunch of time researching these projects. I wasted a bit of money as well, investing, or I would say now gambling on those projects. And I thought that I was doing something smart, while I actually was only, a mix of naive, perhaps gullible, and greedy as well. And I think greed is I think the best marketing for Bitcoin. The number go up technology is inevitable, and it attracts people in waves, right? Anytime there's a pump, usually brought by the halving events. But anyway, that's beyond the point. And when it comes to shitcoinery, I mean, I guess it's like Michael Saylor, who earlier in 2013 or 2014 was, tweeted about the basically that Bitcoin were to die, right? Would be dying in, from an inevitable death in the coming months. And only for, 7 years later for him to invest 100%, almost the majority of his treasury into it. And I guess I did the opposite on my own, humble scale, where I sort of realized over time, and I think a lot of people do realize that over time as they sort of do research in the space, that shitcoinery and all the related alternative implementations of cryptocurrencies are not really the interesting thing in the space. Like if you're really study monetary history and you understand that Bitcoin is about a monetary evolution and not a technological revolution, which is much more like slow and steady but inevitable, you realize that there's a lot of misallocation of time, energy, resources, and money into shitcoins. And look, there's been a lot of really successful and profitable businesses in the industry, and I respect the operators and the entrepreneurs running them. They've done a lot of hard work, because it's very hard to operate a good business in the industry with all the regulatory risk and all the hacks and scams and all this. But I think what would be interesting from these platforms is that they disclose the risks of all these implementations and essentially, qualify their activity as what it is, which is they're casinos. And gambling is great. I have zero issue with gambling. Personally, I think it's fun, it's entertaining, but some platforms do sell those shitcoins for their fundamental values and narratives, and I think that's a bit dishonest. But if you say, look, you're gambling your money and the goal is to get more Bitcoin, because we all know that the common unit of account for all these traders and gamblers is Bitcoin. They want to get more Bitcoin over time. They're not even pricing, or if they are, it's not wise, but they're not even pricing their returns in dollars or any other fiat currencies, right? They're pricing it in Bitcoin. So I would say, overall, I don't have an issue with shitcoin who disclose themselves as shitcoins and highly risky experiments. Now, do their market capitalization or monetary bases are justified, even if they provide those disclosures? Maybe not, right? If you're a pretty fundamental research and development project and you're doing really cool stuff on ring signatures or zero knowledge proof or whatnot, should your market cap be $2 billion? Maybe not, right? But again, and this is what I said in the article, there's a real massive economic incentive for participants to basically create their own money printing press. If they can create a token that then they can advertise on platforms to sell to other currency holders, they will benefit tremendously from that activity. And for now, it hasn't been regulated. There's been, I think now there are over 7,000 alternative projects in this space, right? I'm not sure they're all running still. I'm not sure they truly have the trading volume that they claim they have. But regardless, there's truly a demand for production of alternative monies. And it's interesting because this project, this phenomenon, I should say, has been out there for forever, for millennia, right? The fact that humans, with greed and the sort of the interest to have control over the money production, will find ways to extract seniorage privileges because it's super profitable. It's, I think, perhaps one of the only industries that have been going up in market capitalization since the dawn of time. It provides phenomenal privileges to the very few back in the days lords, and today random internet users to essentially capture. And so what cryptocurrencies have done today and shitcoinery has allowed is basically the huge democratization of money production. As a reasonably technically savvy user on the internet today, you can create a cryptocurrency in an afternoon, and I'm being generous, maybe less than that. And if you're good with a little bit of marketing, a good narrative, and some friends at other distribution platforms, you can actually get this thing into the hands of a bunch of retail investors who are just greedy and who don't really ask anything, who don't really do much due diligence. And all of a sudden, your coin is going to be worth a little bit of money, and you can exit that position yourself and do it again, or just like maintain it and hope that the price keeps going up because other holders are buying into this Ponzi scheme. So again, I think overall, honest disclosures of the risk involved would be great in the space. And then, yeah, if people want to gamble with their money, great, let them gamble. It's awesome. Let the free market decide,
Yeah. Yeah. I mean, if I had to pick between, Bitcoin or free market, I would definitely call myself more of like an advocate of free market fundamentally, right? Like it's not like, and so from that perspective, people should be able to create whatever they want, and people should be able to buy whatever they want, even though you and I obviously kind of see it for what it is. And, like I like forget even Ethereum, like let's say Litecoin. The guy changed three parameters, three like numbers in the Bitcoin protocol and the Bitcoin algorithm, and called it Litecoin essentially, and exited, and it's still a thing, right?
Yeah.
But let's dig a bit deeper though. So like Ethereum, right? World computer. Okay, let's peel that onion back a bit. Turing complete, right? That resonate. That was kind of the narrative, right? I mean, that's essentially what they're trying to do. They're trying to bring, the ability to do, like, I think one description I heard was, if Bitcoin's a calculator, Ethereum's a computer, because it can do if then, it can do while loops, you can implement a fully functioning programming language on top of this network, right? That's kind of the sell to like the engineers of the world, right? And even though I'm not going to lie, in the earlier days was super like, okay, but you can do that in Bitcoin, but Satoshi chose not to, because it opens up an attack vector, and it just bloats the blockchain. It had all these like kind of good reasons, and I was like, okay, so is this another one of those, we changed a couple of parameters and we're trying to, and so that was my initial kind of take on it. But looking back, however, like I said, I like who am I? Like I don't believe in, I don't necessarily, I'm not an advocate of like advocating for men to go around in guns and telling people what to do. Like I'd prefer that people get to do what they want. I agree with the disclosure element. But I also wonder, like, has Ethereum brought a level of, innovation, right, if you will, in the sense that, yes, again, I'm definitely not putting a lot of my life funds into it, but is it allowing, for people to create, like you said, at kind of a quick pace? ICOs were kind of the big rage back in the day. It's kind of died out now. Now DeFi is the next thing, right? But fundamentally, I would argue that is it even comparable to reinventing money? No, even the stuff that's happening in DeFi. But I would probably argue that some of the things that are happening on DeFi are more advanced, more exciting, and some could consider even innovative, right? I'll use one thing as an example: building a DEX, right? The idea, like centralized exchanges, like like the big exchanges in the world, they offer a point of centralization that is obviously susceptible to coercion, right? So before I even got into the exchange game, I was always thinking about like, will these things ever be decentralized completely? And we're seeing, again, can you say it's a fully, DEX or whatever that these guys are building? But we're seeing examples of it. So I'm curious to know now, just to shift gears into more like there was the real shit coinery, and you could say it's still very shitty, but there's this argument of like it's pulling guys like you who are now helping Bitcoin, right? You're running a custody company that's backed by the biggest names in the world, and et cetera, et cetera. So could it be argued that there is and again, ideas are being tested at scale and quickly and failing. I agree, failing quickly as well. But is that a good thing, in the overall kind of spectrum of like humanity, as in like we're trying shit, we're failing, but maybe the best ideas, like if you look at things like RSK, Rootstock, that's like they're doing Solidity on top of Bitcoin, right? So they're going, hey, why don't we give that type of functionality to people, but using, whatever, side chains and whatnot. So I'm curious to know your thoughts on that. Like, is there some good in terms of, what it's maybe bringing into the ecosystem? Like in terms of the
Yeah,
recent, innovation.
I'm going to give a controversial view on that. I think capital, if used well, provides a return that is net positive based on the risk you took. So risk-adjusted returns is the notion, is always what you want to derive from your allocation strategies, right? The thing is, if you invest the capital and it's sort of wasted because the activity was unproductive and failed, then you're back to square one, right? Capital is not destroyed; it's just transferred over to someone else or some other companies, individuals, or whatnot. And from that view, I think if you look at the overall space of cryptocurrency and protocol developments and DeFi and all of that, there is a lot of waste. There is a lot of capital that is misallocated. And what it does is it essentially, in my opinion, and I think not even my opinion, I think from the general understanding of economics, if that capital were to be used for more productive uses, then those areas, you'd see them flourish, right? And so essentially today, there's a lot of investments in DeFi, I'd say. And out of DeFi, out of 10 projects, there may be one project that makes it through for now. But that project may never make it in 10 years, or it may. The point I want to make here is like, well, what if this whole capital would have been deployed on Bitcoin projects? Because we both know, you and I, that if you look at DeFi projects or Bitcoin in 20 years, one is highly likely to still be around. The other is not so much. And so from that view, if you lower your time preference and realize that there is a cost to misallocating that capital, then yeah, you're actually, it's a net negative, the whole cryptocurrency space. Because if you had invested the capital in Bitcoin, perhaps the protocol would be more advanced today, or perhaps you'd have more companies onboarding users onto Bitcoin. I don't know. I can only speculate, right, at this point, because it's a theoretical, it's an if.
Have you looked at things like Uniswap and all these like new things? Have you seen, like, what are your thoughts on decentralized exchanges in general? Like, do you believe that it
I
should be a
like
thing?
the idea, right? The idea of a decentralized exchange is really interesting because it basically, it allows users to remain sovereign, right? They hold their assets, and it allows basically peer-to-peer trading. So I'm not stuck with an intermediary. There's no vendor lock-in, and I can use my capital as I please with another human being on the internet, right? That's a pretty great narrative, and I think it's a pretty important use case, especially trying to get rid of censorship, trying to get rid of the many fees, the latency in the settlement of current traditional financial services. Like there's a whole bunch of really interesting value propositions here. Now, these are, in my opinion, narratives, right? They're not truly valid for the current implementations of these DEXs. I know a few projects, like for instance, BISC or HODL HODL, where you actually, as a user, run a piece of technology which allows you to get a direct access to a distributed order book, right? Think of it as an eBay for Bitcoin, right? Where you have buyers and sellers, and the matching is sort of done between people. It isn't centrally coordinated. So the price discovery happens in a different way from centralized exchanges like, the big ones, Coinbase or Kraken or Gemini. And so that is really interesting. But the problem is like the user experience is not there yet. The liquidity is not there yet. The pricing, the fees are pretty high. There still are a bunch of scams. So it'll happen. It's funny because usually what you see in the cryptocurrency space at large as projects that are being tested, that have money, that serve users with real capital at risk, are usually much smaller projects and much more humble projects in the Bitcoin scene, where the developers and the researchers and the users are being much more conservative. And I think there's a learning transfer that happens from the mistakes that are done in shitcoin land, where developers and users are a bit more reckless and they're a bit more high time preference, where they're willing to take on risk with their capital, and Bitcoiners who truly understand the value in their capital and their really scarce UTXOs, and because of that, know that when you misallocate that capital and you lose your Bitcoin, it's a pretty expensive mistake, because that capital, it's gone from you, it's gone. And for Bitcoin, it can actually be completely destroyed and never recoverable, right? And as we both know, the 21 million hard cap limit on the supply of Bitcoin is really the sort of the main driver for these types of very conservative behaviors.
Yeah. No, actually, I didn't get to it, but I had a whole bunch. But one of my other reasons was that I love the deflationary nature of Bitcoin, the fact that I think Ethereum isn't inflationary, nor is it deflationary. I think the word is disinflationary that they use. But
Nobody knows.
Yeah.
Can you verify?
There's a lot of, look, at the end of the day, like Vitalik was, I think, 19 or 20 when he decided to do this, right? And his what his reasoning was is maybe he only knows. But again, in retrospect, obviously if I would have, seen the so-called light a long time ago, I would have been better for it financially. And even Uno Coin, the company I started, we've got a coin in our name, and we hesitated to do an ICO because, I used to be a financial advisor in like the normal world a long time ago, and I used to run my own brokerage. And so I kind of know that it's like a no-no to take money from your neighbor. Like, it's okay to take money from a billionaire because he's not going to lose sleep at night. And it's just like fundamentally, it's like an easy thing to understand for me, right? If I'm going to embark on a highly speculative venture, I would rather go to like professional investors that do this all day, and they're not going to, not be able to make rent if things go bad. So, but again, that's been my position, and that's why I've raised money from like reputable investors, blah blah blah. But again, I don't. Like, my only real strong belief is that I don't think you should be, inflicting force upon others, without their will or whatever. Like, it's like you shouldn't be, like bullying people around. And I don't see them doing that. I think that the argument around like marketing and maybe misrepresentation and not doing enough disclosure of like the risk, I think those are all valid points. And I think more of that should happen. And, that's part of why I like, back in the day, I used to do like 1,000-person events in Toronto, and we'd have like 5 people doing ICOs and then Tone Vase on stage with them. Because I just love, I love hearing the spectrum of ideas like right in front of each other, because then you kind of hear it all, right? And you can make your own decisions. But yeah, sorry, I think you were going to say something.
Yeah, no, in terms of the target audience, right, of ICOs, you mentioned that, you've been raising money from reputable investors who have enough dry powder to essentially, be able to lose some of their money that they invest. But the reality is ICOs or all these most of these cryptocurrencies, they're targeting um, uneducated investors, retail investors who don't have much money and who are essentially gambling, right? They're gambling, they're looking for a quick return and looking to exit. And it's interesting because, well, it's pretty sad also because a lot of people lost their life savings. And now you're going to say, yeah, well, they shouldn't have put their life savings into it in the first place. And I agree. This is really bad risk management, to say the least. But
who decides that? Who decides that? Like, you know what I mean? Like, just because you and I are on here being like, look, Bitcoin's like, amazing. If
well,
some, like, who decides? Like, who makes that decision, right? Like, you know what I mean? Like, isn't it like if Joe Blow does lose his money and he doesn't do his research, isn't it to some extent on him? And obviously the person, promoting it. But I mean, like, he's got to bear some responsibility.
yeah, I 100% agree. And I'm for the free market, generally speaking. Free agents have information at their disposal. They should seek different perspectives and with that make an analysis and then make a decision and then take action. And then they should be held accountable for their own action because it's from a process of reasoning. The problem is, though, is if you don't give all the information to someone, then they're not going to be able to have the right analysis and essentially derive the right action from that. And so you're basically tricking people into buying pretty delusional narratives, which are untrue, often non-founded, and even sometimes outright scam. And that is the issue. To me, a free market doesn't mean that fraud should be tolerated. Fraud is theft. Theft is against property rights. And for a really good functioning free market to operate, you need really strong property rights. And if theft happens regularly in that market, it means that, yeah, the market is dysfunctional because it doesn't have the ability to essentially filter out the scams and the fraud, which again is against the ethos of a free market, because everything should basically, any human action in that market that ought to be free should come from voluntary engagement. And you can only voluntarily engage in an action if you have all the information at hand.
Yeah. Where we talked about both of us, I guess, either being from or spending a lot of time in Canada. We had the Quadriga debacle obviously here, right? And that's been a big mess as well. And so again, from that perspective, the ultimate end game for that is to build a DEX, right? A decentralized exchange. It's to have it so that, you don't have a centralized party. And anyways, I just find it fast. And, stable coins, right? Yeah, they might be, terrible and maybe governments will hate them. But the fact is that they serve some sort of purpose. I mean, there's a tremendous amount of, volume and people wanting it, right? So I'm just wondering, like, these are things that I personally did not, see coming. And I wonder, it's something that I seriously think about a lot is that, is like, what's too risky? Like, is it Ruja with the one coin? Obviously, that's like a blatant, and by the way, lots of people are buying into that. And it could be argued that, free market, whatever, but that's just straight up like crooked, right? And then there's others who kind of, I guess, use the veil of technology to sometimes obscure what's happening, you know what I mean? And mislead people. And I think that's really the part where I think more people within the industry maybe that know about what's going on or can sense what's going on need to speak out and maybe tell people, I don't know. That's all I can think of doing right now at this point in time is yeah. But again, at the same time, I don't want to be the guy that's like, oh, innovation is bad, because like someone would need to convince me that DEXs are bad, stable coins are bad, doing insurance on the blockchain is bad and lending on the blockchain is bad. Like seriously, like isn't a goal to get rid of central parties? So and a part of me is kind of, like I said, is that, with Bitcoin, I don't even think it's just about allocating more capital towards Bitcoin. Like as an engineer, I look at Bitcoin, you look at like the complexity and the just how hard it is to actually program on Bitcoin versus something like, here's 3 lines of code, Sunny Coin is a thing. On Ethereum, it's pretty like different, right? And so again, I don't know if there's like, final answer, but like I said, I want to keep moving forward on stuff because I know we only have like 35 minutes or so left, but I want to talk about a couple things about, well, we didn't really, again, we can take it wherever you want. We didn't talk a whole lot about, Knox. I'd love to touch on that a little bit, at least in terms of, so you guys are obviously, maybe you want to do the background in terms of, the elevator pitch, if you will, what Knox is, who maybe your backers are, if you're able to share, what kind of solution you're bringing to the market.
Yeah, definitely. Knox is a Bitcoin custodian, right? Pretty simply speaking. It's been created in 2018, and it is fully custodial. So I'm actually we recently released a blog post about this. Like, is Bitcoin custody sort of an inescapable evil, or is it a desirable industry maturation essentially? And I think there's a lot of good optionality in the marketplace right now that is rising, and so Knox is positioned as a custodian which is trust minimized in one way, and that is with insurance coverage. So as a custodian, Knox gets coverage for theft and loss of all the Bitcoins that is held on behalf of clients, and that is for the full value of the Bitcoins that are held. So meaning that for 50 million or $200 million of Bitcoin that we would store for a customer, we can get the exact same amount, so 50 million or $200 million worth of insurance coverage for that account. And so that is a new model. It is different from other custodians who emerged as, I would say, like the first wave of custodians back in 2013, 14, and who were basically built as almost as like second order effects of operating an exchange business, right? Because exchange platforms, you have to build your own private key management system to operate, and it's sort of the cost of doing business. And basically all that infrastructure you build is pretty costly to build, because it has to be really secure. It has to be offline most of the time for the majority of assets. It also has to communicate to other connected wallets to make all the assets accessible to trading, and so on and so forth. So essentially, what some of these companies have done in the past was basically to spin off this infrastructure as a marketable product and services, really. And so what we did at Knox that was different was we started as a custodian. We're a custodian first and foremost, and we're basically looking to build other services on top of that in the future, as other custodians do in traditional financial markets. If you look at the big guys like State Street and BNY Mellon being the two big names. And so Knox, when it got started, basically worked with insurance markets at the very beginning to build a truly insurable custody product, which would take into account the entire key life cycle. So from the time you use entropy the seed, to generate a private key, to then store that private key and use it to sign Bitcoin transactions, and then of course back up that private key in case the private key gets compromised or lost. And so the whole key life cycle has a lot of different attack vectors that emerge, right, in different security models to mitigate those attack vectors. And so what Knox did was work with insurance markets to help them understand really what are all the different attack vectors that lie in that key life cycle, how they're mitigated, and for the attack vectors that cannot be mitigated with technology, hardware, cryptography, and so on, or operational procedures, which are a bunch of things that we do internally, we get insurance coverage, right? And so because you make those attack vectors very isolated and highly unlikely to cause a loss of or a theft event, interest markets get comfortable basically insuring the whole thing. Because when you think about, skin in the game and economic incentives, an insurance carrier, meaning a carrier of risk, right? An insurance partner will allocate capital to another company which originates risk. And we do originate risk as Knox, because for every dollar of Bitcoin that we hold for our clients, this represents $1 worth of risk that is originated. And we tell the insurance markets, hey, we want to transfer that risk off our balance sheet to your balance sheet, and we'll pay you a premium for that. And so some insurance markets are going to be like, there's no way, because it's too risky and I'm not going to make money, right, on that deal. Or some insurance, carriers will definitely, underwrite a policy for your product and essentially build an insurance policy which will cover the adequate risks. And so that's what we did. Took us over 2 years of working with insurance brokers, Aon and Marsh, and we ended up working with Marsh McLennan, based in London, UK. And then Marsh, worked with, of course, their local syndicates of insurance carriers to build what we call insurance towers. So think of them as different insurance carriers coming under a policy that they agree on. The policy is all the terms and conditions of the risk that is being insured for the company that they're working with, meaning Knox. And they basically allocate capital in tranches of what we call insurance capacity, which give us the ability to transfer, as I said, all the risk that we originate in the form of Bitcoins that we hold for our clients. So that's a pretty different model for all the other custodians out there.
Just to be clear, so when, let's say, XYZ exchange partners up with you and gets, let's say, $100 million worth of coverage on their $100 million worth of Bitcoin, but then the price of the Bitcoin doubles over the next whatever X number of years, they still have that $100 million of coverage, right? They don't have it now like $200 million of coverage. It's not on the Bitcoin itself, right?
They do. So they can dial up or down their coverage based on market volatility, and basically keep that 1-1 ratio. Or they can decide to sort of reduce their ratio and go from 100% coverage to 50% coverage. If the premiums or I would say that the fees from that are becoming either too expensive for them, or they're okay having only 50% of their assets covered. Like, the point here is there's no one size fits all solution for insurance and custody. Like, it's a pretty, like, it has to be bespoke. It has to be tailored, because different companies will have different internal requirements and different controls and different, risk exposure and tolerance to that risk. And so based on that, we give them the flexibility that they need, basically. And the compromise we make is on sovereignty. If you think of custody in a mental model with 3 main parameters that you want to optimize, which are security, so all the assurances that you're not going to lose the funds, simplicity, right? So all the complexity around operating such a custody product, and finally the sovereignty, right? Your ability to do these 2 things in your own control. And so Knox, and in general, you can only optimize for 2. Oftentimes you're gonna have to give away one of these 3 things. And so Knox really optimizes for simplicity and security with the insurance product, but we do have a trade-off on sovereignty. And so that's why Knox isn't for most people, most retail investors. I still recommend pretty vocally that most people, should learn how to hold their own keys. It is a fundamentally important task at hand when it comes to using Bitcoin. But some investors, and often agents who manage capital on behalf of others, or fiduciaries, right? Let's say you're a company and you're putting your Bitcoin treasury, your treasury into Bitcoin. You have essentially a fiduciary duty to your shareholders, right? And all of these responsibilities include, of course, using your best ability to work in the interest of your shareholders and your investors, and not lose the money that you've been trusted to manage. And so custody often is a risk that you're going to be required to outsource to a specialized counterparty. So essentially, some fiduciaries are actually not capable legally of custodying their own Bitcoin, even if they wanted to.
Right. Yeah, and from what I know as well, there are some regulatory requirements around all of this as well, right? In certain countries where you can't be the custodian of the funds that you enable trading of and whatnot. Okay, very interesting. Anything else you want to share on Knox? I mean, I had a couple questions about the concerns around, let's say, okay, if I understand correctly, like your main market space are like exchange owners and whatnot, right? People who hold a lot of Bitcoin on behalf of other customers. And by the way, is it true you guys were backed by Fidelity Canada, or did I just read that wrong? Are you able
Yes,
to mention that, or?
we are backed by Fidelity Investments Canada. Yeah.
Okay, so I guess what I'm trying to say is like your system has been vetted. There's that, but most Bitcoiners and Bitcoin exchange owners, they're obviously petrified of the idea of letting some entity control their funds, or customer funds, or companies' funds. So I'm just wondering, without going into, is it possible to explain, I guess, how you enable that in a way where, yes, you don't have as much sovereignty, but you still have the ability to retrieve it in case you guys go under, or something terrible happens?
Yeah, definitely. If I were to use a simple analogy of a warehouse, Knox is a Bitcoin warehouse, and we rent different boxes to our customers, which are different Knox custody accounts. And anytime you sort of use and essentially rent one of these boxes, the Bitcoin you deposit in that box is in our possession, right? But you still have control over that Bitcoin, and you are the legal owner of that Bitcoin. So, and again, there are three main things here: possession, control, and ownership. And so the only thing that Knox has is the possession of the Bitcoin. And because we give away the full, like the control over how that Bitcoin moves to our client, and I can explain like a little bit how we do this by holding the keys. We essentially give the option to our users to basically do arbitrary operations in their account, but also essentially move away from us so they want to. Like there is no, like we are not the transaction signer, the arbitrary transaction signer. Like Knox, in other words, has no ability whatsoever to arbitrarily move our customers' funds unless there is an explicit request from our clients, and that request must be proven cryptographically. And the details of that essentially internally is we do have specialized signing machines, which are called HSMs, so hardware security modules, which are, just special hardware devices which contain Bitcoin private keys. And they will only use those private keys that are associated to a given customer account to sign a transaction if they received another valid signature that can only be created by another physical device, which is held by our clients. And so because of that, myself, any director and officer at Knox, any staff or employee are completely incapable of demanding that our internal hardware security modules sign Bitcoin transactions. So in a way, we're locked out of our own custody. And so we wrote about this on our blog and have sort of been trying to be a bit more vocal about this, because I think it's a really important property of responsible custody, right? Because the biggest risk at all times, and it's been a massive vector of losses and theft, is the risk of internal collusion. meaning people like you and I who are working in one company and they're like, oh, we're holding millions of dollars worth of Bitcoin. Let's, take them and just go away, run away on a nice island in the Caribbean or something. And so, yeah, we've basically designed and really architected the technology and the software and the operational procedures that we have internally to make sure that there's like this risk is, it's not impossible because it's never impossible. Someone telling you that something is impossible in security is either, not super skilled in the domain or they're lying to you, but it's extremely unlikely. And if, we actually were to trigger such an event, like an internal collusion event, we are covered by our insurance policy.
Right. So I think just to recap, so I guess like that's one of the most interesting things I found about your whole setup is that you've got insurance on internal collusion, which is, I think, pretty challenging, right? Like, I mean, to be able to devise a system that, where an insurance company can feel comfortable that that massive attack vector is no longer, is no longer present, but that it's been minimized to that extent is pretty interesting.
Yeah, yeah. And we do, we wrote about the sort of custody risk management principles that most custodians should be implementing. We don't have formal records whether they do it or not, but we do believe that it would be good for industry standards to emerge around this. And yeah, I mean, it's still a very, very much an early stage industry for now.
I can kind of like see people's brains going in the direction of like, let's say 100 exchanges work with Knox. Now, are you not centralizing all of the Bitcoin on Knox's servers? I know that's like a troll comment, but you're not, right? Because you're using HSMs, you're using hardware that's distributed and that's like not necessarily in one server at Amazon or something.
It's a very valid question. So think of it as Knox at the moment, we do operate what we call processing facilities. What these facilities do is they basically guard HSMs, which sign transaction requests, and then, with other computers, broadcast those signed Bitcoin transactions to the Bitcoin network. At the moment, we operate 3 facilities, and each facility holds different HSMs, and each customer account at Knox has a unique set of these HSMs. So we never ever share those devices across, customer accounts. So that's pretty important. But you're right. Let's say there's 1,000 or 100, exchanges in the world who, work with us. Basically, the what's on our roadmap at the moment, like it would be centralized in a small subset of still geographically distinct facilities, but it's a small subset. So what we do have is at the moment with our insurance partners, we do have the ability to hold up to $1 billion of assets that would basically allow us to essentially get the same amount in coverage. So these are early indications from the markets. We haven't bound any of these market policies yet, but this is the direction where we're going. And so when we hit that ceiling, what we are going to be doing is essentially replicate the infrastructure that we have, so the physical infrastructure that we have in different sites, allowing us to really segregate and isolate risk across different subsets of accounts, if that makes sense. And then what you can do is really be also compliant to internal requirements from some customers who potentially would require you as a Bitcoin custodian to hold keys and sign transactions in a given jurisdiction, let's say, right? That's more of a medium to long-term thing, but it is something that we think about quite often at Knox.
And so just to sum up the 3 things again, the 3 vectors were simplicity, security, and sovereignty? No.
Yes. Yeah.
Security, right? Okay, cool. And then you guys optimize around the former 2, so sovereignty. And so you'd say like an Unchained Capital is more kind of optimizing around sovereignty and less around what? Around the simplicity element, maybe? because you need it's
Exactly. Yeah, exactly. So Unchained Capital, I mean, I love what they're doing. Shout out to Phil Geiger and Parker Lewis and the whole team.
Mhm.
It's a great business, and what they're doing is, yeah, exactly that, right? They're optimizing for security with multi-sig. They're making no trade-off when it comes to sovereignty and allowing their customers to have full control of their holdings. But and they're making really interesting advancements in the simplicity of such product. The thing is, it is still complex. It still adds a little bit of involvement from the user when it comes to backing up the different keys, when it comes to storing all these different sensitive pieces of information, and so it is another set of trade-offs. And we wrote another piece on our blog about this, right? About the sort of the different options along the risk curve of custody. Like you have different solutions which will sometimes optimize for simplicity but have a trade-off on security, and or the other way around. And I think what's great for users is that the spectrum of optionality is going up, right? It's really expanding. And so if as a user you have a bunch of options made available and you understand the different trade-offs and you have adequate disclosures in terms of risk, then you can make a much better decision for your purchase, essentially.
Okay, cool. So that's good. I was going to say for the last, maybe a bit of this, the last stretch, we could maybe talk about two things. So one of the questions that I wanted to ask you was essentially around, um, well, two things. One is around more kind of Bitcoin specifically, right? And so the question is, what truth do you see that most other, crypto or blockchainers would, disagree with you on? So that was, and I think we maybe touched on some of it in the sense that, I think our conversation around Bitcoin being, and by the way, I totally agree with you on that. I was just trying to figure out the other side of it a bit in my own head. But I think there's this conversation around that, which I don't know if you want to touch on again. And the second question, I'll just kind of throw them both out there, which is more like not in the Bitcoin blockchain, our kind of ecosystem, but like more globally speaking, did you have any things that you maybe saw were like clear as day that everyone around you is like on the other side of the fence on? And it would be interesting to finish it up on that.
Yeah, that one is interesting for sure. The last one. I mean, both are intriguing. For the first question, so I think an important truth that very few people perhaps understand, even in the Bitcoin community or communities or on Bitcoin Twitter, um, is that I believe that more and more that Bitcoin is going to be a really good black market money, but that Bitcoin will not be a commonly accepted normal money and currency until the fall of the state. And that is a pretty I think we've had a few discussions about this on Bitcoin Twitter, and I think the most vocal Bitcoiner or person behind this thesis is Eric Voskuil, who essentially believes and explains that Bitcoin has been evolving on black markets for a long time, right? And also, like, I guess defining what the black market is, like, to me it's like it's a market that doesn't have to be like, that isn't regulated, that isn't supervised by a national agency or a state actor, and it doesn't technically, right, because it isn't part of a regulated set of markets on a given territory or jurisdiction, it is quote unquote illegal, right? Um, but what is legal is very subjective to a jurisdiction. And so I think Bitcoin is definitely, like, there's just very little evidence for it to be a regulated financial instrument, a currency or a money, call it whatever you want, or a payment network. And so because that truth is just, it's been out there forever, I think as Bitcoin evolves and as sort of regulatory oversight increases around the protocol, it'll be obvious that yes, Bitcoin is a really successful, extremely useful money, but it's bound to be in the black markets until nation states either shrink substantially in their ability to regulate financial markets, and we can cover how that happens, but mostly with the loss of seigniorage privileges and their ability to print. And so, yeah, I mean, if that is the case, then I think a lot of products and services that exist today, like centralized exchanges and regulated platforms, will probably not exist as we understand them in 10 years from now. And I think a lot of infrastructure will actually be focused around sovereign individuals, people who are sort of really independent, who are pretty mobile, and who are optimizing for freedom by using encryption tools for communication, or any other platforms that are decentralized enough to avoid censorship. So that's the yeah, I think it's a really interesting rabbit hole. I want to dig into it more.
On that point, do you mind if I share a quick video with you?
Sure.
I'm going to do a screen share real quick. So who I'm going to share a video of is a guy named Raghuram Rajan. Have you ever heard of him?
Nope.
He's a former RBI governor of India. He was the former governor of the central bank in India. But he's not your average governor. He, I would say, among a handful of people, called the last major financial crisis to a T. He teaches in the Chicago School of Thought and comes from this perspective of embracing free markets. He is an electrical engineer from IIT, so has a very kind of inherent understanding of technology. And he's one of my favorite characters on earth. And he's about to be asked on a video from 2015 what he thinks about Bitcoin. Okay, ready for this?
Mm-hmm.
Share screen.
E-commerce, but to a more important topic of Bitcoins.
Oh, Bitcoin is fascinating.
Bitcoins is specifically very good advantages for a developing nation. And so I want to know, what is your view as a regulator on free banking and having more of equitable currencies floating in the market?
There are some lessons to be learned from the technologies that Bitcoin has employed. Some of them are useful, some of them are worrisome. And we have to see how we take on board such technologies. I have no doubt that down the line, we will be moving towards primarily a cashless society, okay? And we'll have some kinds of currencies like this which will be at work. For us as the Reserve Bank, this may happen maybe 10, 15, 20 years from now, but we'll have to figure out how we make money, because the way we generate most of our revenue is through forms of seigniorage. People are willing to hold currency free of.
At least he's honest about it.
And that's how we make money. And but we'll figure that out. But I think that these virtual currencies will certainly get much better, much safer, and over time will be the form of transaction. That's for sure.
And India will adopt them at some point. We're not going to reject them out of hand.
In a sense, credit cards are already performing some of that role. The amount of rupees that flow through your hands, I presume, are far less than used to before credit cards. And so this is going to go all around. We're going to have near-field contact devices. You just tap and go. I mean, all that we want to permit. We want to permit. I mean, we're not saying we're going to lose money, therefore we won't do it. We'll find some other way of getting money. Maybe government will fund us eventually.
Anyways, I just thought that was kind of on point. Okay, but just to finish up, maybe on. Sorry, one sec. Sorry about that. Didn't pause there properly. Okay, so I was going to say, let's finish up on I guess this last note of maybe something a bit more. By the way, I thought it was a very interesting take what you said. Yeah, I think we should definitely do a part 2 to this conversation, because I feel like we're just getting warmed up.
For sure.
We're just touching on some of these like mega topics that I don't find people talk about. Like I don't know. Anyways, okay. So, but it'd be good to get your take on kind of the same question as last, but more applied to like a global sense. Because I know you have some very interesting thoughts there as well.
Yeah, I mean, I know we've been speaking about a global pandemic that has been affecting everyone over the last few months. And I agree. I think there's a global pandemic. I think it's not the pandemic that is being depicted, though. I think it's a global pandemic that is intellectual. It's an intellectual disease that is spreading across the world. And it's the lack of critical thinking. It's, the lack of individual reasoning and ability to reflect on your own, which is destroying everything. And recently, of course, most people understand the pandemic as being the pandemic of the coronavirus. I would argue that there is a virus, obviously, but that there's no sanitary pandemic. And so, without going into any numbers or graphs or political decisions, I think this whole global scale scandal that is happening at the moment emanates from 3 major things. The first one, which I mentioned, which is a pandemic of intellect and lack thereof. So the lack of critical thinking. Most people today, they only read the big headlines, right? They don't go deep into any subject matter. And that is because, partially because there's a lot of information out there and it's pretty hard to actually filter content. The second, I would say, is mass media sensationalism, like the fact that mainstream media today, again, they're not going deep in subject matters. Their investigative journalism is gone. It's dead. And the reason is because it's economic incentive, right? People in media make a lot of money spreading buzzwords and attracting visitors to click on, really sort of catchy titles. And so that, combined to basically the mechanism of fear really helps spread like massive hysteria. And again, the first point, people don't think critically and just look at headlines. And so because there's the 2 things happening at the same time, combined with a third main element, which is the fact that the state, generally speaking, enjoys expansion. Politicians are elected on the premise that they can be useful to the population that elects them. And so essentially, if they show that they're worth something to an audience, they're going to basically perhaps be reelected in the next elections. And so without going into too many details politically, I think if you're looking at these 3 things together, it's pretty predictable that the corona scandal would happen. I'm not going to call it a virus or a pandemic, even though, sure, there is a virus, but it isn't statistically significant on the sanitary front. It's pretty similar to other waves of seasonal diseases, whether it's the flu, whether it's pneumonia, whether it's any other diseases. And I think it would be pretty surprising to see the state care about the health of its people, right? Because if you look at today, like the rate of obesity in the US and type, and diabetes and morbid diabetes is incredibly high. And all these products are, most of these products are actually sanctioned by the state authorities. And so again, I'm not going to go into political details here, but like I think those it's really interesting because on a global scale, we're seeing that massive rise of just lazy thinking, and I think there's a really interesting analysis around this. It's like the fact that, you know, good times create weak men, and that weak men create essentially good times, and that, no, hold on, maybe I missed that. Good times will create weak men, right? And that's what we've had basically. We've had a massive run up of like wealth and comfort and a whole bunch of other things over the last 50 years. And now we're actually, weak men are creating really bad times. Like, we're actually seeing the reverse side of it. And I think we're going there. But the thing that's good is that when you have really weak men creating bad times, and those bad times really hurt, those bad times are actually going to create strong men. And that's beautiful, because strong men, people are probably going to be rising from these bad times, because human beings, like, we're resilient. We find time, and we adjust, and we learn, and we adapt to our environment. And then as strong men emerge, sorry, I'm losing my voice. I'm a bit sick. As strong men emerge, you're going to see great times emerge as well. Prosperity, right? And rise in comfort and in standards of living. And as this progress, those good times are going to create weak men again. And then it's a cycle, right? And I think it's really interesting, because now we're seeing, in my opinion, we're seeing a shift. And from that old crisis, and from social distress and political instability and the rise of extremism, the same that we were seeing in the 1930s, where wealth inequality was at the same point as it is today. We had a shit show in the world in the 30s, late 30s and 40s, right? With the Second World War, with Nazism and communism and all these horrible political ideologies of far left and far right. And guess what? We're seeing it today. Same thing. It's incredible. Like, history doesn't necessarily repeat, but it rhymes incredibly, like, accurately. And, you know, we shall see what happens tomorrow. But, you know, I'm seeing it in the US, seeing it in Europe. Like, you know, the last elections in France, it was far right, far left, who sort of were fighting against each other. And it's just another guy who got elected who was, you know, quote unquote, outside of this system of dichotomies between left and right. And anyway, I think I never, very rarely talk about politics, but I think it's really interesting, because now the political dichotomy is emerging in social circles. Like, for instance, I've been in pretty serious arguments with some of my friends around this current coronavirus scandal. And I treat it now as a really good proxy for intellectual reasoning. Like, if you're not able to think critically about what you're seeing in the world, what you're being served by the mainstream media, to me, you need to think harder. Like, you really need to learn to, you know, criticize and get some different perspectives and think for yourself, really. So yeah, I mean, that's my take on the global scale.
So I got a question. Are you wearing a mask at the grocery store or no? That's what I'm getting at here.
So in France, I have to wear a mask, but I put it under my chin, basically. And if I have to, because there's a security guy or there's police or whatever, I'll just pull it. But anyway, like, if I'm, you know, in the cities in France, you have to wear masks, and I never do outside. I always have, like, a glass that I carry with me, and I sort of, like, drink sodas or whatnot to not have to wear the mask. Because if you're smoking a cigarette in France or you drink something, you don't have to wear the mask.
Right. Yeah, I again, for me, it's like it's kind of how I approach religion, right? It's like, I agree with a lot of what you're saying, most of it, all of it. But that 0.001% chance that maybe you're wrong, I got my mask on because I got asthma. I'm not going to die. If this thing is real, I don't want to take the chance. But I don't know, man. I think this thing is just it feels like we're in a petri dish or something, and somebody's like running experiments on us to see, like, you know what I mean? Like, I wonder when humanity will crack. Like, we'll just keep them all locked up in their homes for, 3 months. Let's extend it to 6 months. It's like, this whole thing is insane. Like, I think the whole kind of like conversation around like governments and politics and the state, and then you've got like, potentially a scientific health concern, and and you could argue that the science, the health concern is actually bogus and doesn't exist, but it's still a concern that needs to be explored from a scientific perspective. Like, and so my point is like, it's like this, kind of like Bitcoin and politics. It's like, these like things, and almost a complete reverse opposite, but you know what I mean? Like, where people have to think very critically, and politics just, there doesn't seem to be a lot of rhyme or reason. There's just like so many points where you're just like just as one example, like you have to give, let's say, half your money to these people, and they don't even let you just like check a box that says, I'd prefer if you didn't bomb women and children with the money I'm giving you. Like, I should just have the optionality to just say, I don't want to bomb people, or I don't want something really, but I don't have anything. It's just like every 4 years, and in a time where I could literally like something on Facebook that my mom ate yesterday, why can I not make a freaking, decision on what's going to happen in my community or in my city or my country? Just seems super bizarre. So anyways, but yeah, sorry.
You have one for now. I was going to say it's buy Bitcoin and opt out. That's it. That's the best thing.
And that's maybe a great note to finish on is that I had, before I discovered Bitcoin, I had all this beef with the world. You know what I mean? Like, if I saw Occupy Wall Street, I'd be like, I agree with you. I see Ron Paul, I agree with you. It doesn't matter, right, left. If you're complaining, I agree with you. And I found that Bitcoin was like this, I feel, and I still to this day feel, that it's like a point of focus that I can like put my life into, and my energy and my time and my resources. And instead of giving me something to fight against, it gives me something to stand for. And I think all these other things around it are somewhat, whether it's the Ethereum narrative, whether it's DeFi, whether it's like governments and centralization and all of it, even custody and all these conversations in some way or shape or form, insurance and fidelity, all these things. At the end of the day, it's like, when I look at, like as an engineer, there's this thing called a unit step function. It's, you're at 0 and then you have like a 1. It's like, Bitcoin to me represented a unit step function. It was like, we went from 0 to 1 in that moment. Whereas everything else that I've seen since then, has been like a bit of like an incremental build on top of that idea, or a fork of it, or a, slight or Turing complete version of it, or whatever. But it wasn't like philosophy and monetary policy and like code and cryptography and game theory and all these like crazy things, and it's still freaking like kicking ass. If you look at like the coin market cap, even the dominance, if you look at how it compares to like like stocks and this and that, I mean, Bitcoin is kind of the revolution here, and that's always been my primal focus. Just to kind of just elaborate on one little point, but there is something about listening to the market as well. Like, I remember at one point in our company's existence, if we were only a Bitcoin company, which is what we wanted to maintain, we would have essentially gone into business, because the world wanted other things, and even if they wanted Bitcoin, just the fact that there are options elsewhere, people like options. And so, I'm not 100% sure, but I feel like maybe you guys would be open to, doing custody for other asset classes in the future if it made sense, right? Like if it made business sense. Like, I guess what I'm trying to say is our allegiance isn't to Bitcoin because we're Bitcoiners. It's because Bitcoin is the truest representation of freedom that I've ever witnessed. And I want to put my resources towards that. So even Ethereum, like, even though I don't believe in it, I try not to rail against them all that much, because to go against something, it takes a lot of energy. But like when you're for something, you're just like, in line, and you attract other people that are like-minded, and yeah, and at the end of the day, even Bitcoin's a fucking Adam Back, who I think started following you yesterday. I saw your tweet. He even says, I think he said somewhere or somewhere he said that Bitcoin is still an experiment, right? Like, and I think that's a very honest kind of take at it, is like,
what
Bitcoin
isn't
has
an
risk.
experiment?
What isn't
Right?
an experiment? Exactly, right?
I mean, fiat currencies are I think a grand experiment.
A grand experiment. Yeah, exactly. All right, man. Any finishing comments about your website? I don't know, your Twitter handle, how people can learn more about you or block you?
Yeah, I mean, or block me. Yeah. Totally free to block me. Yeah.
I'm kidding. Yeah, but
Yeah, I mean, if you want to check out, what we do at Knox Custody, it's knoxcustody.com. And otherwise, I'm on Twitter. It's a THIBM_. My DMs are open. I love to talk about Bitcoin, insurance, custody, key management, economics, many different things. So please do reach out.
Awesome. And then your article as well. You want to make a quick reference to that? The article that went live today, I think I saw it go viral.
Yeah. So I wrote an article for the generous Bitcoin magazine called The Great Plague of Shitcoinery. That was actually my second article for them. The first one was on Bitcoin as the internet monetary layer. And I hope I'll write others. I also write a bunch on the Knox blog. So if you want to check it out as well. And yeah, keen to hear your thoughts. This one was a pretty controversial article, and I knew it would trigger a few people. And I actually didn't think that Bitcoin Magazine would be down to publish it, but hey, they're a Bitcoin only now, so they did
Couldn't have
publish
picked
it,
a better
which is
spot.
a massive move for them.
Yeah. I thought it was on brand, and hey, man, you know what? We're all like battling out there with ideas, and it's good to be, it's good to have this like hour with you, man. Really enjoy our conversations, and let's do it again, in the next month or so if you're free. All right?
Yeah, awesome.
All right, I'm gonna just stop here. All right.